Tech stocks taking it on the chin over the past month, with most of the carnage coming just in the last week. The S&P Technology Index now down more than 9%. 29 of the NASDAQ 100 are now down 20% or more from their 52-week highs, led by chip makers AMD, Intel, and NVIDIA. Joining us right now to talk tech stocks and so much more, Stephanie Link, Hightower, Chief Investment Strategist. Are you looking at this and you're saying, oh, my goodness, everything's on sale, I should go buy some of this? Are you saying to yourself, the knife is falling, I'm going to keep letting it fall until I want to catch it?
Well, I think the expectations are still pretty high, Andrew, but I do think we are getting a couple of good looks at some of the bigger names in technology. I own Amazon. I like that name a lot. And I own Apple, and I like that name a lot. And I know that's pretty controversial, especially as numbers are coming down. But I do think both stocks offer good risk reward into the prints, and I will be long both of them. I like IBM very much. As you know, they're really turning the company around into software and consulting and services and recurring revenue is going on the way up, which is good. And they are an AI play as well. And I like Lam Research. That stock has come down quite a bit. I think semi-cap equipment is very interesting. You need 6 times the memory for AI. And these guys are one of the leaders. And wafer fab equipment is actually recovering. So I can pick and choose within tech, but I will say I am underweight the sector relative to my benchmark because I do think that there are other areas in the markets, energy, financials, industrials, that are very attractive that I think are also going to put up some very good numbers.
We're going to talk to Phil LeBeau in just a moment about Tesla, because that stock has taken a real shellacking, I think is the technical term. Yeah. Do you have a view on what we're going to hear on Tuesday?
Well, I never like it when margins are going down in any company. And that's what's been happening over the last year and a half for Tesla. And that is a big problem. Not only that, but it's competition. And it's also hybrids are taking share versus EV, the pure plays. So Toyota has done amazingly well in this front. And I think that's the way I would go at this point. I think we kind of pulled forward a lot of the expectations in terms of EV demand. And so I think you just want to be, kind of careful in that space. And the valuation is still just too hard for me to get my arms around, Andrew.
In terms of the quote-unquote AI play, everybody wants to play artificial intelligence, and the best way to have done that over the last several years has been to buy NVIDIA. At this point, do you want to own either them or one of the other chip makers, or is there some other play? You want to own Microsoft? You want to own Google? How do you think it?
I think you definitely want to have AI exposure. You can own NVIDIA, although I think everybody owns NVIDIA, and I've never really made a ton of money when everyone's on the same side of a story. So I own Broadcom, for example. I mentioned Lam Research and how AI is very important on the memory side. I own Snowflake, which has not been a great call. It's down about 30% from when they reported earnings, but I do think AI is only as good as the data you put into it. And these guys do that in size and scale. They do have a new CEO. It's a kind of a prove me moment for the company, but I do think the setup is really quite interesting. And maybe it's a little off the radar screen versus a pure play like an NVIDIA.
Stephanie, the momentum last week was so violent. This is Bay of Fundy sort of tidal shifts that are taking place. $950 billion in market cap lost from the Magnificent Seven. NVIDIA losing $300 billion. That's more than an entire AMD. Yet we're only 5.5% from the all-time highs for the S&P 500. Do you think this continues, this pullback, or do you think that people stop and look at the earnings and look at a great economy and say, okay, maybe we hold here?
Well, I think technology has competition, Becky, in terms of earnings and other sectors reporting very good earnings. And that's one of the reasons why I think you have seen a broadening out in the marketplace since October of last year. We've had some fits and starts along the way, but we are seeing many more names, many more sectors participating because, yes, as you mentioned, the economy is growing at about 2.9%. Last week, we had the IMF increase growth to 3%. 3.2% for the global growth. We had China's GDP coming at 5.5%. So all of this means that I think earnings can be better than expected in a lot of various different sectors. And so I'm overweight energy, I'm overweight industrials, I'm overweight financials. I think the numbers are going to be good. I do think tech, there's a place in the portfolio for tech, but they're more vulnerable. And I think we just have to step back. We are 5% from the highs in the S&P 500 in a month's time, but we are also up 30% in the last 16 months. We have had a heck of a run. The long-term average, as you know, for the S&P 500, the total return is 7.5% to 8%. So we've definitely had a good run of it, but I think now is the time when you're going to see other companies take the spotlight beyond tech.